Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, the Federal Reserve's announcement caused havoc right across the board as its cautious outlook for 2025 spooked traders. The policy statement indicated just 2 interest rate cuts next year, down from previously projected 4. Federal Reserve Chairman Jerome Powell signaled a slower pace of rate cuts, citing persistent inflation and labour market resilience. The Fed implemented a widely expected 25 base point rate cut, lowering the federal rate to 4.25 to 4.5. Despite solid economic growth and lower employment, the Fed hinted at a potential pause in interest rates at its January 2029 meeting. So turning to the technicals, with the level at 62.80 crushed, the market is now exposed towards the region of 61.75. Reassessed from there due to the strong trend that's increased overnight, the fact that market may actually look towards 60.60 before any reversal, with the resistance seen around 62.40 to 62.80. Turning to the euro, it plunged its lowest level since 2024 following the Fed's rate cut announcement, breaking through the key level of 104.30.40 zone. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, surges to 108. So with a policy statement just projecting 2 rate cuts for 2025, the Fed also noted in the statement it forecasted the PCE inflation at 2.5% by the end of 2025, up from 2.1% in September, while GDP growth is seen around 2.1% and unemployment around 4.3%. So therefore the market is still digesting the overnight's announcement. There is still a little bit more to come to the euro, and that is the weakness may find further levels towards 102.90 to 102.45 before turning around. But like previously, breaking above this channel, we should see a bounce from there and look up towards the region of 104 and reassess. The Japanese yen edged lower on Wednesday as its rough December continues, as all eyes are now on Bank of Japan, with the consensus leaning towards a no move, while the broader outlook suggests a potential hike. Nevertheless, the rate is still expected to hold around 0.25%. So turning to the technicals, the market still holds to a somewhat bullish bias, but keep an eye on this RSI, as there is divergence here and it could see another significant downturn like previously seen up at these levels. So anywhere from 155 may see a key turnaround and look towards a support level at 152 and maybe even towards 150. Despite hot inflation overnight, the pound snapped its 2-day bull run, and now all eyes look towards the Bank of England's rate decision, with officials expected to hold rates at 4.75%, though a 25 base point cannot be ruled out. Looking at the technicals, I feel back into this zone here may find demand, and therefore looking from 125 up towards the region of 126 to 127. I'm not going to turn bearish. The bullish divergence is strong, so therefore the market may snap to the upside and regain and capture its momentum and look on maybe even further to 128. Turning to commodities, gold plummeted further. Now I haven't had a view since reaching 2,700, and with the market plummeting the way it has, wiping out all of December's and most of November's gains, let's see how the market plays into today. I'm still keeping a neutral bias, but I am expecting to see bargain hunters to return very soon, and that is from the region of around 2,560 to around 2,578, and if so, could see the market break higher. That being said, though, we still need to clear the level around 2,640 to support any further gains up towards the 2,700 mark. Slight whipsaw price action for oil, but ends neutral, and therefore the market still holds steadily to, I expect, to a bull run, and that is on towards the region of $70 to 71 or even 72 as a target, and with the support clearly seen around 66.70.90, but above there at 68.80.90. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the day.